With contradictory news reports, can Bitcoin continue to cling on? So after filling the CME gap yesterday, we saw a bounce with price back above 27k, and it seemed to come on the back of a sentiment shift following comments from Fed member Philip Jefferson. So bring up the story. He's the governor of the Fed, and he made the comment that pausing interest rates would let the Fed better assess the data that was coming into them. So this was taken by the market verbatim, and we saw another major swing in the chances of a rate pause as it moved back to about a 63.3% chance. That reversed the exact same swing that was made the other way late last week when we had major banks publicly stating that they were anticipating further rate hikes. So we had Jamie Dimon from JP Morgan who said this, that people should be prepared for more interest rate hikes, and also similar statements from Larry Fink of BlackRock. And they both kind of converged on the same information, that they expected that there would be 2 more rate hikes. So Jefferson told us that we would get a pause, but that would be a hawkish pause, meaning that he's basically echoing the same statements of Jamie Dimon and Larry Fink, that we're going to get this rate pause and then we're going to get continued interest rate hikes. Effectively, we're just being told that we're going to get more pain for longer. How this affects the chart? Well, initially, we saw a pump. We got back above 27k, and then we saw a further breakdown. Now, this morning, the European markets are seeing this pump up a little bit. And personally, I had anticipated, having filled the CME gap, that we would see a bounce. We drew in this tighter trend line yesterday, hopefully representing the idea that we were going to see that bounce there. And so far so good in terms of holding on. If we zoom out, we can see that the issue in terms of really understanding where we're going to go is really down here, not on the charts. What we're looking at there is very low volume, and unfortunately I think that we're probably going to see that continue. So we're probably likely to remain within a tight range, whether it's the range indicated here, or whether it's going to be perhaps a little further down, going down to the support here at 26.3. But really, without major volume, we're not going to see a defined direction or breakout. And the reason that I think that we're going to get continued low volume, or even a further drop in volume, is basically that we seem to be facing what's called like a liquidity squeeze that's going to get worse with the debt ceiling deal having been ratified. So basically, part of the deal that's gone through, it was confirmed last night about 2 a.m. UK time, is that we're going to see certain mechanisms by which the US government is going to refill its kind of treasury balances. So one thing it's going to do is we're going to see a massive amount of treasury bills being issued. They're very secure, safe, long-term investments. So that is going to pull liquidity out of the market, as people are going to choose to invest in them over other investment vehicles such as Bitcoin. We're also seeing things that might more directly affect the target audience and retail traders. So for example, student loan repayments, which had previously been paused, are going to restart as of August. And what that's going to do is you're basically just taking money out of people's pockets and limiting their ability to invest for their future, and that is effectively removing volume and liquidity from the total market. In the shorter term, if we drop down onto the 1 hour chart, we can really kind of focus in on this. I'm going to take the CME gap off. I'm going to take off the indicator so we can just have a look at this in raw form. And we'll zoom in a little bit because I did notice something quite interesting. So here we can see that in terms of price, the volatility overnight gave us this series of lower lows. However, if we come down onto the oscillator, we can see that in the same period we were printing higher lows on the oscillator. Our oscillator is an RVI, which is basically a volume-based version of an RSI, operates in exactly the same way. And so effectively that would be a bullish divergence, which is probably, showing that we're going to see an increase in price up to a certain point. Hopefully that's going to take us back above the 27. And that's probably my short-term target for the day. However, it's going to be very much a wait-and-see day, I think. We do have a little bit of economic data dropping later, which is the PMI, effectively like that's the supply side inflation. However, the comments from the Fed yesterday, I think, are telegraphing that rate pause, so I doubt that it's going to have a major impact. Let's have a quick look at BTC dominance. So fourth day in a row this is dropping, and that looks like we're going to have a confirmed bearish day in terms of the dominance, which is good in terms of our kind of alt trading. If you want to join our Discord, all these signals are completely free. In terms of results, we've had a decent day so far with good wins coming in. Super USDT there and GRT USDT. So we're probably going to have a successful day in terms of alt trading. Bitcoin trading, I'm taking a very much a wait and see, anticipating short term with a bullish divergence that we get back above 27 and hopefully remain in that range, that tighter range that I've drawn in here. Thank you very much. Join the Discord, completely free trades. Any questions, drop them below. Hopefully speak to you soon. Bye.